These are the SBA programs that your bank does not want you to know about. Look, you're obviously familiar with SBA loans, but there are some SBA loans that are out there for new businesses, for acquisition, for other purposes that you probably didn't even know exist. And I'm going to go over those right now so you know all of the options available to you through SBA, and you can tap into these powerful options to get the funding you need to grow your business. So first, why would you even want an SBA loan? Two reasons: rate and term. Look, when you're borrowing money, the biggest, most important thing you want is the longest term you can get. Longer term means lower payment. Then when you combine a long term and low interest rate, you get a really low payment. So let me give you an example. I borrowed $75,000 in my first loan here for Credit Suite, and we paid over $9,000 a month for that money. It was a little more expensive. The term was short. Then we got an SBA loan for $325,000, and our payment was half as much. It was $4,600. What? How do you get $250,000 more in funding and have your payment half as much? That's what SBA loans do. You see, SBA loans with 20, 30-year loan terms and low interest rates means you can get a lot of money and keep your payments low. And that's why everyone wants SBA loans. But there's a catch. To qualify for SBA loans, you have to be kind of like pristine. You have to have good personal credit, good business credit. You have to have collateral. You have to have cash flow, tax returns for years that show a profit in most cases. Or that's what the banks want you to think. Not necessarily true. I'm going to tell you the truth right now. So as a result of that, most people don't even get into or think about SBA loans until they're many years in business and well established. Okay, in the beginning and acquiring a new business, or if you're going to start a new business, most people don't even think about SBA loans for these purposes because they are conditioned that it only works for really established businesses, which isn't true, as I'm about to teach you here in just a matter of minutes. So let's talk about the most popular SBA. There's two kinds of loans that are the most popular that you're going to run into with SBA. The first is called an SBA 7A loan. It's a working capital loan. And all that working capital means is it means you can use the money for any general business purpose. You can use it for hiring, you can use it for marketing, expansion. If it's for a business purpose, you can use it for that purpose. The next is called an SBA 504. This has a specific purpose, and the specific purpose is to purchase a fixed asset. A fixed asset typically is like equipment or real estate are the most common uses of SBA 504 loans. Those are the loans when people think about SBA that everybody thinks about. But there are some hidden SBA loans you probably didn't even know exist, partially because the bank doesn't even want you to know they exist. The most popular of which is micro loans. SBA offers micro loans for $50,000 or less. The average loan is $13,000, and they're very good for startups and newer businesses. So SBA microloans are perfect for those businesses that are just getting off the ground. So why do you not know about this? Why is this not common knowledge? Because banks don't offer them. Look, SBA does not offer money themselves. They guarantee the money. So the way the system works is a bank like Chase Bank offers an SBA loan. And SBA says, hey, if you give that business owner a loan for $100,000, then if that business owner defaults, we'll give you 90% of that defaulted amount. So Chase really can't lose because Chase is giving you $100,000, and if you don't pay them, well, then SBA will give them 90 of that $100,000. So Chase risks so little that they are then willing to offer the money. So SBA doesn't lend money, they guarantee money. But here's the problem. Microloans are just that. They're micro. They're $50,000, which could be a game changer for us. But for a bank, that is a very small amount of money. They can't make enough return on that to go through an underwriting process. They just don't want to touch it. So the result of that is that they just don't offer them. You can't get SBA microloans from banks. It's why you don't hear about them. Instead, you get them from what are called SBA intermediaries. SBA intermediaries are like nonprofit organizations, small community organizations that help you with the process of getting these micro loans. Now, you can simply go to Google and just type in SBA microloan or SBA microloan intermediaries, and you'll end up on SBA's website where you can find an intermediary in your area, like in your area, in your state. They're really broken down into states. So the one you're going to go to is based on your own geographic area. But You got to look into these. Microloans are perfect for newer stage businesses, or if you're just launching a business. You get a good term, you get a low rate, and you can get it even if you're newer in business, even if you have average credit. Microloans, check into it. The second thing are SBA acquisition loans. Look, buy or build. There's a great book on that same topic. I think it's called Buy versus Build, something like that. I should know, I read too many books. Okay, but this book is all about why you would want to buy a business versus build a business. Any of us that are entrepreneurs know it is freaking crazy to build a business. It's stupid hard, and the hardest part is in the beginning, 1 to 5 years. That's where most businesses fail because it's so hard. And if you buy a business, well, they already made it through that 1 to 5 years, and then it's already generating revenue, it's already generating profit. You come in, you're instantly putting money in your pocket. You already have a successful, proven business model. It's easier to launch, grow, and scale from there. A lot of people think. So if you're looking to acquire a business, it may be better than trying to build one on your own. But how do you get the money to do so? Well, SBA acquisition loans will cover 80 or even 90% of the purchase of a brand new business. Now, the business has got to qualify per SBA standards, and you have to have good credit to qualify per SBA standards. But if your credit's good and the business is a solid, legitimate business, then you have a good chance of getting approved for 80 to 90% financing. And here's the best part. You can oftentimes get the other 10 or 20% the SBA won't give you multiple different ways. You can have the seller hold a note, or you can come in and get other kind of financing using your personal credit, your personal assets, or the business assets of the business you're buying to cover the other 10 or 20% down. Look, I'm one of the biggest coaches in the space teaching people how to buy businesses, and this is exactly how we do it. You go get an SBA loan for 80 to 90% of the acquisition price, then you get other financing or a seller-held note to cover the 10 or 20%, and you could potentially come in with little to no money down. Okay, one of my best friends did this with a reputation business, and he's killing it. They make like millions of dollars in revenue and profit, and he used an SBA acquisition loan to actually make the purchase. So these are very, 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 very effective loans if you're looking to get into buying a business. Here's a third type of SBA loan you probably didn't even know about. It's an SBA startup loan. That's right. You can literally get hundreds of thousands or even millions of dollars to launch a brand new business. That's well more than a micro loan, and these are offered by SBA lenders. So how do you get approved? Well, to be honest, you need to have really good financials. Since the business isn't generating revenue and you don't have business tax returns, they're going to want to see your P&L. They're going to want to see your tax returns. They're going to want to make sure that you are financially solid. So if you have a really good credit score and good financials, like let's say you just exited another business, right? You've got money in the bank. You've got stocks and bonds and 401ks and IRAs, then there's a good chance you can actually qualify for an SBA startup loan. So most people don't even know you can get millions from SBA to start up a loan. You absolutely can do so. So there you have it. 3 types of SBA loans you probably didn't even know about. Microloans for newer businesses, acquisition loans to buy the business of your dreams, or even SBA startup loans where you or somebody else could be the signer that has good credit, that has good financials, and you can get hundreds of thousands or even millions to launch a brand new business. Don't forget about 7A and 504 SBA loans as well, because that whole arsenal of SBA products gives you the money that you need at great terms to be able to grow your business. Hey, if you got value, make sure you like and subscribe and tune in for my next training where we talk about more cool ways to get the money you need to start and grow your business.